Okay, thanks everybody. I think we got the issue. We had a little problem with the sound. We're all good now. How's everybody doing today? Sorry about that. On the open. What's going on? Yeah, I was just showing that risk disclaimer, but I had no sound, so I think we're good now. We good? Give me a shout out in the chat. Let me know that we're good. There we are. I see levels. So, as I was saying today, we're going to go through crypto briefly. I want to get to the bigger markets. Obviously, after yesterday, last few days, we keep seeing the market just roll over. And that's not, we're year-end selling. I think a couple things we need to be mindful of is we're at the year-end selling. Here is this, come on back. Let's go to the head and shoulders pattern I posted. Okay, so that's going on with the larger Nasdaq structure. Let's go back there really quick. And we're now kind of triggered that BAM move. So that's what we finished up with yesterday, probably the best spot to go with today, where we're taking out the B point, we're trying to rally, but we have a larger bat formation structurally off the October low. The 886 on NQ continuous futures at about 14,650. So that is the larger scenario. We could have plenty of zigzag ups and downs en route, but we're there. And it kind of reminds me of this chart that I posted yesterday of Ethereum. And that's over now. I put an update this morning. That Ethereum, that was type 1 reaction. Let me go to that chart. And let's just do the comparison rollover. There it is. So that was this morning. And here was the chart from yesterday. Again, we were right there in the zone at the check back spot with the trigger calling for reaction up to target 1, target 2. And here's why, for me, it's over for now. We've seen a lot of reactive moves. You've violated that uptrend. Final thing that we see is HSI has triggered your first reading since the last one here. Okay, nice reactive move. Trigger, there's your check back spot at around 40.30. Could that continue higher? Sure. But based on the 1-2 framework that we do, my next assessment for an opportunity off of that pattern is on the type 2 retest. And we are officially in the type 2 return stage. I'll talk a little bit more about that next week because I think we did a session a few weeks ago on the type 2 return phenomenon. And a lot of people, I think it bridged the gap between the reaction and the reversal well for people to understand. So that's something where those small strategies and ideas can really put the larger framework together. You have, I think we all can assume, and especially with the auto-generated patterns from Harmonic Pattern Collection with a trigger, makes it real easy. We know what zone, what area, what are true harmonic levels, and that's why clear reaction. But even with as nice of a move as that is, in the current environment, we know that these are tradable more than holdable. And bring this back here, just get a larger perspective on Ethereum on the daily, folks. One thing I wanted to point out, something I've been saying recently, is that if we can connect dots based on the alignments that I'm, at least for me, what has been working for me, the kind of the ideas that I've put forth from that basic structural knowledge of connecting the pattern dots. So if this is, we're going to do that, what we're kind of seeing there is, all right, something that sets us up. It's not a shark pattern. Okay, I think you're going to see where I'm getting to this in a second, but this preceding formation is not a shark. All right, but that doesn't mean it can't be a 5-0. And what we have currently in Ethereum is you have that setup where, all right, we just look at the data from September, go forward, and we connect dots. All right, what could be here? I mean, that's really my point yesterday of just thrashing Bitcoin and thrashing those technicals was simply looking for something that could be of concrete value for the long side to support the uptrend, the longer term uptrend. Otherwise, are we going to roll over and do something deeper? And Ethereum, as I said, it's not the greatest of patterns, but this really high level ABCD at the 1-1, it really shouldn't even be at the 140. It's more like the 113 because this is an 886. It gives you some kind of constructive structure, but off of this prior low, what I want to look for is how it respects the 50-618 zone. All right, your 50% level, 37.40, 618, which is, again, look, let's just admit it to ourselves that the bigger boys, the whales, the guys that can stick $1 billion into a support zone and hold it up are aware of the 618. I don't know if it's self-fulfilling or not. I mean, clearly, as I said, I alluded to this yesterday that, or maybe it was even Thursday, that we're seeing this so much in crypto. It is clearly something, the 618 number, the 61.8% retracement ratio, relative measurement, repeats in nature in all types of cycles. So it's, for me, it's like it is the primary harmonic ratio number. The 618 and the 1618, that's pretty much what the entire framework is based off of, or some derivative thereof. Square root of 618 is 786, cubed root 886. There are some harmonic levels that are not related directly to the 618, 1618, but they're complementary. 314 pi. For obvious reasons, the pi is a real great number for basic cycle measurements. But, the important concept here is that we're seeing the 618, the major retracement level, over and over again come in at critical points. I will say this too, folks, and I've been mentioning this for weeks. It's December 21st. Where are we? What happens in this window now, I think, is everything, because we've been waiting. Personally, I've been waiting since the 21st. We've seen some pivots over the last 3 quarters at these cycle equinox dates. So I'll talk a little bit about harmonic timing strategies too today. I'm going to look at a couple things one-to-one, other alternate time projections. I'm going to give you guys a couple excellent references where you can learn more about general timing strategies, methods. But for Ethereum, crypto, everything, yeah, time is probably key. And we know we're in this window where, okay, in the markets, people are throwing away, trying to get rid of their losers for the end of the year. As I mentioned yesterday, if you want to take gainers and you want to cash out at, almost half the tax rate that will be implemented next year, you're doing it now. So I think there's a lot of reactive possibilities here, but for Ethereum, of all of these, holding up the strongest, the 5.0 with this kind of truncated ABCD structure certainly gives us the absolute make or break, the prior low, the 618 5.0 zone, I don't, beyond that, and that's really kind of finishes off this make or break tightening of the long-term stop. For Bitcoin, we know it's under 43. For Ethereum, I'll say it's under 34. And even within this immediate structure off the October low for Ethereum, if we do roll over, okay, you take your make or break up, you go to the 886 and you finish that BAM breakdown. That's what that bat action magnet move. Why? Because your B point's basically a 50 there. Already trying to threaten it. I mean, by definition, you can already connect these dots to get there. Maybe we're up and we bounce in some reactive moves. But that would be the breakdown objective, and that simply takes you back to October. That's not a stretch. That would be a nice bullish pattern too. One thing I didn't go into yesterday that I would like to really quick before we get out of the crypto sphere is the total crypto market cap. Okay, the entire scenario again. Let's connect dots, folks. And this is just a point about the connecting dot idea. I think for the framework and understanding where we are within our M's and W's, it helps to clarify. You can't fudge the general shape of M or W. X has to be some kind of clear low. A is the extreme peak or low, depending on what it is. B point, that's your determinant. Really, that signals what kind of M or W. C point cannot exceed A. So there's a whole bunch of things there where where the C point occurs can also tell us a great deal about the character of the structure. Finally, then we come down to a D point in a retracement pattern cannot be below X. So if we know what B is, B's at a 55%, pretty close to the 618, almost in between, but the 3% ratio we use is the tolerance. That's one of the tolerances we use for Gartley. This is maybe just outside of it, a little too much, where then we go 886. Besides the 886, statistically, folks, this is a nugget. If you're going to hit a 786 or an 886, your statistics say you're going for the 886. And it's not even close, overwhelmingly. So that's some of my work. That's why 886 is bread and butter for me. 886 here, 1.9 on the total crypto market cap. That would be better. That would be a more ideal spot than right up here, because you can't even, for the total crypto market cap, if we were going to do the same thing that we did for Ethereum and maybe try to trace out this as a 5-0 structure, from starting from there. Again, we have the problem of, it's not that it's a problem, but it's not a shark. We like to see the shark precede, but not in this case. So then you come down and look, you're well past any kind of continuation metric. What do I mean by that? Well, if that move from September up to November was really strong and was going to continue, at most, in the strongest of trends, we go to the 382, and then we would have continued, but we didn't. We continued lower, and that's something where, let me take that off, and again, I would be patiently waiting out minimum 886 test off October swing. That's 1.9. Actually, a little bit lower. 1.85 generally. A lot there. So I got to keep my eye on you folks. I get distracted into the charts, right? Really quick, everyone. I know a bunch of people are new. Welcome. I want everyone to go over to harmonictrader.com. If you're having an issue with logging in, some people have. I think it's either the browser or some kind of update I need to do on my page. Let me know. Connect with me. Go to the Discord as well. But all the books are available. This is something else I'm surprised not enough people know, that people are still looking up for my books online, because the books have been posted for years, pirated for years, quite frankly. They're all available there, the official copies. So I'm going to look at a couple of general timing models today from volume 3. Just some assessments, some things that we can consider going forward. Why? Because even from a price perspective, we know that we are getting to the limit. From a time perspective, well, how far can we give this? How far can we let this go sideways before something larger takes shape? So we'll come back to that. For today, okay, S&P's up 39. Nasdaq's now back positive after being down on the morning. So we might see some bounce reaction. I think it's going to remain volatile, and we're going to jump over to those markets in a second. But there's a lot to get to, I think, with where everything is, both in price and time. Dow's up 400, and that's a little better. I mean, those have held much better than tech stocks recently. Let me bring this back up here. Thanks. Today, where do we go with that? Hold on, folks. I'm missing something on my chart. Bring this back up. Thanks. Okay. A couple of shout outs quick. Some people are saying, want to finish up from crypto. A couple people want to look at some altcoins. LRC. Yep. I'll look at that. Storage is the other one. And some gaming coins. So really quick, because we do have a couple of larger patterns there, that's the ideal scenario, right? We want patterns. We want to see some kind of definitive formation. Hold on. Get that out of the way. And let's take a couple of the smaller coins. One that I have mentioned a few times. Bring it back up. Storage. So we've gone sideways for a while on this. There's the daily. Trying to hold there, but the 4 hour is where the pattern sits. Just sideways in the zone. And I mentioned this on Twitter both times where this reaction was just a dud. And do look at the Twitter feed because it's there. If you go back to just a couple days ago, 2 days ago, again, dud. Just a quick thrust up, roll back down. Look at last week's session because I highlighted this and I said, back around 165, 160 if you wanted to take a shot. But all right, now we do have something here with storage that wasn't there before. And that is a higher HSI level in this zone. I want to really kind of just dismiss any kind of home run moonshot thoughts and set the resistance line right there at 230. Forget anything but that. Before I do that, let me just highlight, there's your support on the terminal bar test with 1-2 there with a secondary HSI that's higher than the initial one. That's important. Okay, it's something to take note of. Both sides, bullish and bearish, because when you have successive HSIs that are, say, going lower, like look, we come into the zone and we have an HSI test and we said it was kind of a dud, which it was, and then we register a bearish reading. When that happens, the beauty of that signal is that when you're in the zone, the software spots up the trades in the zones, and with confirmation, we know what we're looking at. But the phenomenon of just simple reactions off these zones can't be ignored. And one of the ways we've kind of been able to kind of sort that out and help traders understand when it's time just to take the small move is an HSI, that red arrow against you in the zone. At a minimum, it's going to take more time, if not a retest. And that's what went on here, came back, and now for the first time in a long time, we have a higher HSI. Here's the initial one. There's the secondary reading. And take a look at our indicators. All right. At terms of price, okay, a higher low. The secondary reading though on HSI itself was still a bit lower, and I'm thinking this is all reaction until we come out of there. So really critical to know with a lot of these, for those folks that are working with the program, we're still just looking for reactions out of these zones. One other one I wanted to highlight that came on my screen recently was Engine Coin. Another nice pattern down here, but just kind of waffling, wavering, if you will. There's an ABCD. Let me get a different feed. I think it's had a better chart here. There you go. So you had two patterns, big deep crab off the top. All right, and it hit the 1618 almost exactly. Yeah, exactly. Yeah, let's call it that exact. That's exact. At 215. Then you come back down, and here's another smaller ABCD right into that area that's, 209. I think I've got two. Well, hold on one second. Let me take this one off. That's why it's blurry. I installed two of them. But again, the problem with this is we're not reacting. And let me highlight this ABCD. Yeah, where'd that go? There you go. So that can be a trigger within the larger zone, and I'm okay with that. But again, in terms of time, you're running out of time. This would have to absolutely begin to explode off of that low. Let me clean that out. There you go. That's a better picture of that. I like the fact you got two patterns, back-to-back patterns. Now you have one test up to target one, and again, perfect reactive phenomenon, folks. Goes up to target one, comes back down. Okay, we didn't hit that XA level. Really, it's so close. And the other ABCD is what you retested. So I'm monitoring this closely. But here's the thing we're seeing on a lot of these coins with HSI, and this is the beauty again of the HSI indicator with patterns. Because we know that patterns give you that reactive move, we're going to see it a lot expressed in HSI. So maybe the indicator moves a bunch, but the price doesn't do a heck of a lot. And maybe this will take 10 or 15 bars with a consolidation before we could see something much larger. Kind of a warning sign. I'm looking at this. I certainly think there's a lot of things here that are interesting for the first time in a long time. And this is something where hop level, general $2, 209 is your XA. You have a big prior HSI trying to stabilize. And then the daily as well. All right. That's looking better now than it did maybe a week ago. But this is where we want to see price action assert itself. And certainly, you fail under these lows, you go to like 190 anything. This is probably going to just default to the weekly full 886. Like, look. Here. And this is a problem with a lot of these. you're at this point. This is at an all-time 618. Check it out. This is engine. And remember, just what was this a couple weeks ago? This was one of the metaverse things that. Okay, your 618 right there, almost perfect. 187. Trying to find support at that major harmonic level. Really depends on what the monthly close is. Keep an eye on that, folks. I think that a couple of those are interesting. And, there's ways that we can look at this really soon. Let me check out. I'll go to LRC. Yep. And I'll look at Luna, Gala. Are we doom and gloom still? It's not necessarily doom or gloom. I really think the Bitcoin scenario is running out of time. And we can grind. We had this phase in Bitcoin that in June, July. I didn't get a trigger yet, and I'm certainly thinking that it's the structure and the kind of the framework that we said we were assessing the entire cycle on, which was a crab 1618 up to 89,000. That's failing. And that's what I was talking about a few weeks ago, that if that failed, what were we going to look at? Something deeper. Yesterday we went deep dive into Bitcoin of why retesting that pattern down at 22,000 actually might be the best thing for it. Here's LRC, folks. What do you want to look for? Something like this does a crazy move. In my opinion, it's more important to hold the lows than the highs. You want to see this continue, obviously, and that's a weekly chart, but really have to, how much are you going to give back? If you're in LRC, this is certainly one that I was screwing around with earlier this year. I did not catch this move. Did not catch that move. That was, and it was one that I was targeting. And it was around 50 cents. It goes to 350. What are you going to do? Are you going to take that or hold it? Certainly what your time frame might be is important. For LRC, maybe what that is simple ABCD off the top, kind of like of Ethereum, at a 50 level with certainly, again, look at the 618 come into play here as your true make or break for the whole thing for LRC. So, you see that LRC, if it rolls over, doesn't continue. I mean, today's the first day it actually broke above a prior high in a while. Pretty nice, pretty strong. And we do have a check back on HSI. Down here was a 220 area, but it's real clear. I mean, if this, like a lot of these others, roll over, it's just a matter of adjusting long-term stops. That's absolutely the thing. If this is a growth organism, this is growing in a spiral fashion, if you will. There are definitive areas where you don't want it to come all the way back to an 886 and sit through that ride and say, well, I was in at 50 and the 886 is at 75, so that's 50%. That's not trading optimization. That's the exchange all traders have to go through. How much drawdown are you going to allow in any move before you take profits or limit risk? And that's something with a lot of the coins. Again, I think let's look at the next one, Luna, rocking, breaking out. Had a whole bunch of press hype recently. One of the strong ones, probably the next Solana. But here we go. Let's go to 1 hour. So there you go. Looking at a deep crab. And we were talking about Luna a few weeks ago down here at that butterfly level, 55. Now Luna sitting at a deep crab off of that. There's actually a few things up here around 85. Hop level is 93. So you're almost out of a point where this should give you a type 1 reaction. And it could go as high as 93, could go up another $7. But if Luna is going to continue, and where I'd want to grab it would be on the pullback and then have that fail. So great situation that if you're in Luna, maybe time to recirculate some profits here and look for the trigger up a little bit higher and then come back into it at another time. You're almost there on HSI. You haven't triggered yet, so probably another few bucks higher minimum. And then amplified RSI, that's the top indicator. That's heading up. That's fairly strong. So, you're close, but it's not a place where I'm going to long a new position. If I was going to long a new position, it would be after the reaction of the pattern. But as strong as that is, and Luna's probably been the strongest, yeah, you're getting close to pattern completion. Let's look at that next week or maybe even Thursday. Hey, James. James says Luna has a new DEX. I have no idea what that even means. I mean, I'm joking. I do, but it goes into all of the stories. And I'm glad that the narratives have been working, were working for a while. Most of the year you get something like that and you get a solid move. But that is, look, think of it this way. We get a big news announcement, okay, at an hourly or 4-hour 1618 pattern. 1618 extension generally is just overspill. It's kind of the natural state of completing one long cycle. And so this cycle, in terms of time, which is what I'm going to get into in a moment here, is also, you would look at that and say, okay, that's about it. I mean, one of the easiest ways that I look at patterns, really to determine structural symmetry is to assess one-to-one moves. So if you go X to B, that's your midpoint, that's your one-to-one move there from the pattern perspective. Okay, we should be seeing that completion roughly close to that one-to-one. And that's something that, it's more of a general estimation. A lot of times it is kind of implicit in the price, because the symmetry in the price and the way that stuff lines up is really important to get us the distinct M and W formations. I mean, think about it this way: if there was just a blasting move that hit the 1618 within, a handful of bars, well, it's probably telling you something larger, stronger is developing. But if we get nice symmetry, and look, it's grabbing off of this point, not that point. Why? Because it's relative to the B. That's really is the determinant. So you go December 10, midpoint 16, that's 6 days. 16 to the right, 22. Let's look for that generally. Luna, I would still say, okay, hops at 93.70, but our one-to-one equivalent move is tomorrow. Think of it that way. I want to pull up some illustrations here in a second, but I've got the wrong book. Let me do that in a minute. Speaking of books, let me show everybody it's amazing that this book is not widely available, and I think it's one of the best trading books out there, especially if you're an Elliott Wave devotee. I mean, everyone should study Elliott Wave. But here we go. An individual I respect immensely. His name is Robert Miner. Dynamic trading, dynamic concepts in time, price, and pattern analysis. with practical strategies for traders, investors. Bob Miner is just kind of like one of the top technicians of our time. Uh, a lot of the alternate ideas, for example, some of my ideas on alternate ABCDs, I can directly attribute to Bob Miner's ideas of how he did alternate time calculations and Elliott wave calculations. The book's super expensive. It's worth it for your library investment. If you can find a digital copy, try to. It's just fantastic. Check out his website too. But a lot of the alternate concepts, even if you're not into Elliott wave, what he did with that is trying to create zones and create projected price and time where price action comes together. It sounds like harmonic patterns, right? And a lot of the inspiration came from him. So I never really, maybe I've mentioned him before, but I would always give him a shout out. Can you construct harmonic patterns in logarithmic proportions? It's one question coming in right now. You could, but it's not going to show you. I mean, it's going to show you maybe longer term. For example, if you were looking at Luna on a log, and look, it's a valid question. You're just not going to see it in the same way. It's going to be. Think of it this way. Okay, if how much of a value is that? Okay, if you're not in the position. Conversely, if you're looking for targets longer term, let's say you were confident we're in a cycle top for crypto. Well, I would look at that, but all of these are longer term assessments. I don't know if you can truly consider them actionable, but you go on your log scale, you're 3618, which is probably the most we'll use on the log scale. Calculates a little bit differently. But I am not really that into utilizing logarithmic. I just don't think it helps you for immediate decisions. Look at regular. If you're looking for an edge, folks, if you're looking for different ways to maybe get a clearer picture, as we discussed in our last session, go to Heikin Ashi candles, okay, or look at Renko bars, or even point and figure. That tell you a lot about trend, and even listen, these bars are calculated slightly differently, but you'll still see patterns. I mean, check this out. You still have that pattern in the Renko, but it's a bit clearer in terms of the price action. VJ saying 5-second patterns. I should do 5-second patterns maybe Thursday. So another thing is time, talking about time here, or your time intervals. Longer term versus shorter term are important. Someone asked yesterday, what are the important time frames? It really depends on what your objective is for trading. If you don't have a lot of time and you're looking for more investing style, you still use the patterns the same way, but you're going to go with daily weeklies. One of the ones we looked at last week, really quick, of kind of longer term opportunities is Philip Morris. That had a couple of back-to-backs. Let's go to the regular candles on that, because that's actually already gotten up there, almost to target too. We talked about this is Altria, not Philip Morris. Disclosure: I own a bunch of this, and I will continue to. Not just off the pattern. I owned a bunch from a couple of years ago, and I continue to add to this thing. But this is still beautiful reaction, and it still could come up. But that's a clear example of where beautiful pattern, all of the same dynamics come together, pattern completion, confirmation, I would still treat that as a reaction. We don't quite have an HSI. We have no HSI variable up there yet. Look, it's in the overbought, but still expanding. So if I'm a longer term investor, time frame, I'm not taking profits on that yet. And that's, look at, that's a whole swing trade that took a few weeks. In that case, daily or 4-hour time frames are important, but if I'm a short-term trader, even if I'm a crypto trader, shorter term time frame, I would go with like 5-minute levels mixed with hourlies. I thought we were going to be a few moments on crypto, but here we go. BTC. Now here's Bitcoin on the 4-hour chart. Really quick. Like here's a 5-minute pattern. Couple of short term. You see it over the last, 24 hours. It's a lot of reactive stuff. Go to the hourly. We do have an ABCD here. Retesting this little ABCD for the third time. And we just generated an hourly HSI. So I would be, for now, if you're trading Bitcoin, let's look at that resistance at 49. And is there anything on a 5-minute level that's up there? Not yet. So we're still thinking just reactions with these, though. Absolutely. Let's, really quick, I do want to talk about time. Let's jump over to Harmonic Pattern Collection Pro. This is on eSignal. I wanted to let everybody know that actually go to the blog, go to harmonictrader.com and check the blog. And I'm starting January 1st, we're going to go to exclusive subscription model. So I won't be selling an ownership license anymore. And this would be your chance to upgrade, get the complete package by December 31st. That includes the TradingView program. So you get 2 Pro licenses and you get HPC TradingView. If you already purchased TradingView, use the 20% discount code, and that will credit you for the TradingView HPC Lite, and you'll still get 2 other licenses, owner's licenses. Also, I wanted to say, folks, if you want to change your license, let's say you get on MetaTrader and you're like, I want to try eSignal, you can change at a later date. I'm fine with that. But just get with it now before the 31st. Important. So let's look, since we've been yapping, we're going an hour now, almost an hour. I'll go another 10 minutes or so. Let's look at today, NQ. 5-minute chart up here at 1580. We got the retest. So that's for today. And I definitely am targeting that for, real ideal. That was a big type 1 that happened this morning. We want to look for that up around 15,820. That's about 30, 40 higher. Hold on 1 second, folks. 1 second. Be right back. Okay, sorry folks. Jeez. Anyway, let's get into it. Let's get to the bigger markets of 1820 for today. We have I'm still looking for this. And I wanted to show this, okay? Um, what do we have here, folks? Going back to last, what, month? Going on 6 weeks? Massive sideways. And I'm going to go to the Twitter feed in a second, but you just need to know that's what you want to see. If we're going to get a rollover, something larger to trigger, it happens on really with a sideways consolidation first. And that's some of the bigger markets I'm going to get into of that. Okay, yeah, this is setting up for me now. Where speaking of time, yeah, we're taking enough time and go to the daily. Where this is not, this is something where you go off your next swing, and it's just go off the October low. We're seeing that in Bitcoin. We're seeing that in the major markets. Not that I'm not dismissing the fact that there's going to be opportunities. But as I said, for Bitcoin, it's at the right price. And I just absolutely, uh, as a trader, need to anticipate that kind of stuff because the in when these patterns and these formations are in development, folks, it takes time and it can be difficult to really get there. Sometimes I'm absolutely I kind of feel it, see it, and this is something like the crypto I said yesterday, where it just not doing what it's supposed to do. If it's an uptrend and starts rolling over, then you see early signs, and this has got even on a larger level. What I've been saying all along is this whole midpoint off the October low was your critical pivot. And if that's we could even say that this is, theoretically a 5-0 pattern. We do have, it's not really a shark up there, but it looks like this. The other thing about this tight consolidation, this ABCD segment, okay, matches pretty high up with the 50 level. Our attention has to be on that 15.6. We break down that. It looks like it's starting to slip already. You shoot the gap. You do this. And this is what I posted. Here you go. Posted this one this morning. Oh, sorry. Let me get back here. Oh, it's just slow. Hold on. Folks, if you're not following me on Twitter, that's really one of the places to get me, or get on our Discord. And the handle is at Harmonic Trader. Just wanted to mention that. A couple people were asking me if it was harmonic trading or harmonic patterns. And here's the outline for that Nasdaq, where we are shooting this segment from the breakdown. Okay, that's the bat action magnet move. The other thing in terms of time, which is really, again, something I want to kind of pound into everyone's framework of, we're looking at price, but we go and use the midpoint B. If that is the midpoint. Okay, that's the midpoint for the whole first move of that structure. You come down, you go from October 3rd to December 3rd, 2 months. Then would not surprise me. Go January, February to the right. This kind of projection, I think, helps to kind of give us limits, and that for me. So let's take it out to February 3rd. It would be something like that. Come up and then come down for the bat. And that's not a huge move. That's just retesting the October, but that's your bullish scenario. The bearish scenario would be, taking that out. So I just think there's a lot of things here where you can connect dots that show you lower, and until I see something otherwise that's dramatically different than that, I will favor that side. Couple of more questions. How would I rate Heikin-Ashi candles with harmonics? Are there any advantages, disadvantages? Well, the way Heikin-Ashi is calculated, you have the prior close. The close is actually the left side of the candle, and then the next open is the right. Go to Investopedia, TradingView, take a look. I think each candle really has applications where Heikin-Ashi, Renkos, they're great for looking at reversal or trending behavior, maybe more so than what you see here. A lot of times you get into these chop scenarios where you're not seeing the true nature of the trend. So I think TradingView's got a really nice interface with all of those. Like here, I can bring up like the Qs, or even bring up the futures. So no matter what, everyone, the takeaway here is that we are in still a reactive environment. It's not a situation where, frankly, I want to be kind of hodling anything. Futures, options have been tough in this environment because of all of the volatility. But it just on the flip side, knowing that that's to your advantage, then you can be reactive. I mean, this morning here we had a monster move in Nasdaq come all the way back, and now we're setting up for the secondary retest. And of course, in futures you're not theoretically hodling, but you're certainly not looking for swing trades in this environment. You want to take it, get it, and go. Even something with harmonic patterns as well, folks, that I think is really helpful to understand. That let's say we get a strong move off of a pattern where you blow down to target 2 and you take it off, or even worse, okay? This is a good one from this morning. I was actually in on this morning on this short down here, and I took a bunch off at target 1. And then the whole thing collapsed. A much larger move. You're talking 50 from the 1618 down to target 1, and then it drops another 100 and something. Yeah, 150. Got to recognize these moves for what they are. Quick, sharp, reactive zigzags. That this is why we do the trading. That's why you're in front of your charts. You're not in front of your charts to sit on your hands. Absolutely. I think if you're futures trading, for me, I'm easily trading 5-7 trades a day. If I'm staying in front of my screen. Something to think about. That's, again, goes into the whole time concept of why are we in front of the screens? To learn, absolutely, get more experience, but if our shortened time frame is to take advantage of the more opportunities, then if you find yourself getting into positions and not managing aggressively, then you're probably not on point with the perspective. 1 second. Another question coming in. What is the allowable margin of error for point B? It depends on the pattern. But we use tolerances for all the points, and that's actually something else. I don't won't get into it too much, but look, we know what the gamut of harmonic ratios are. X, A, B, C, D. All right, and this here's a crab. I mean, this is a great. Here's another great example from this. Recently, just in the last 24 hours, you had a reaction and then a devastating failure. That's why sitting on your hands on a type 1 is bad strategy. Now, this crab worked because not only because you had the alignment, but also C point is within the tolerance of ratios for the harmonic spread. And D point with the other ABCD metrics, look, that shows you perfectly your zone down here. Now we go back up and hit target 1 and 2 for this. One moment. Okay, really quick. My boss is calling me. So be mindful of that. Let's take a quick look at, let me bring this back up. I want to look at one or two other time considerations for today. If you want to get the books, everyone access that on the basic members page at Harmonic Trader. And the time stuff that I'm going to talk about, hold on, pull this up here. Volume 3. Couple other. Do I know when the bot's going to be available? As I said, probably January, folks. And it will be, as I said, it'll be beta. I'm still trying to figure out the best way to deliver it. I think it might be through an interface, not necessarily a downloadable. So, again, I'm not, it will, you guys will get it, and we'll get it out there. It's, there are legalities here in the United States that most other places don't have to deal with, and it's annoying, but it's the case. And one of the problems with the bot in the United States, if you don't do it the right way, they consider that a discretionary advisor. Like these expert advisors, some of them they consider a discretionary, like as if I was clicking the mouse for you, and that's a major no-no. So just that's what I have to make sure I'm not gonna rush out and do it the wrong way. So let me bring this one up too. Hold on. I lost the page. Couple more. Thanks everybody for showing up today. Again, we're here Monday, Tuesday, and Thursday, generally 11 a.m. Eastern. And come the new year, we're going to tighten a few things up. I do have a big announcement on Thursday, and it has to do with a live event that will likely be happening. So more details come Thursday. I want to give everybody enough notice so you can make your plans. And again, I think next year, in the coming year, we got a lot to look forward to. A couple more. I think I'm going to hold off and maybe let's go over into illustrations here of the time considerations. Maybe Thursday. We just got dragged out on crypto. Let's do that. Because there's a lot involved. There's a couple ideas that are related to where we are. on crypto from a time perspective. That yeah, let's save that for Thursday. Let me pop up an update quickly. Crude oil and gold, just because I'd like to hit those once a week. And another one with crude oil, big reaction territory, but we're still holding, and I don't think that's going to change. Okay, remember, basically $80. And I think generally across the board, your 75, 80 range longer term is everything you want to pay attention to. Where are we now, and what happened yesterday was, I think, really telling. We came down and we had this crab that was back in August. We had the big retest type 2, overextended, then back down, two patterns there. So we looking like we're going to come back and again retest this bat, maybe back 75, 75.50 after yesterday. These two lows, there, right there, off of that target too, and then the secondary low have to hold. So crude oil still in an uptrend longer term, setting up for retest. I just think that this is going to take time. It's going to really kind of stretch itself out. Let's see what happens when we go into January, because look at your longer term charts. This is something where time is important. We are at 2 of 2 on a couple of patterns. There's a butterfly that going back 2018, and we're responding to that resistance. So crude oil, certainly this reaction, the longer it goes sideways, is something that I want to pay attention to. Here, go to the December 22 chart. And this is why we're not one. Again, remember the continuous got flushed out to negative 40. So from a measurement basis for crude oil, I need to look at individual contract months. And we have this big crab pattern at the hop level 72. That's on the December next year, with hop at 73.40. So that's a big structure. And again, I'm not there yet, because it's not, this thing should already be out of the zone. We completed all the way back in July and decided to run to the hop and finally got confirmation. Confirmation's all the way there. This is what I'll be looking at come probably January, the end of January, to see what is this going to do. Is that just correction and then we come back for a retest? Because really not any follow through on that big shakeout. The longer term targets, as I said, I really feel like if things get out of control, we could still be looking for a run to 100. And you go to the contract months, I think this is a really good month because the structure's there, where the all-time data for this contract, December 22, which started trading way back here, and was that 8 years ago in 2013, that went on the board. What happened was that was a shakeout. The big move that took crude to negative was a shakeout on the monthly. Now we have a shark formation where I'm still okay with that. I'm still okay with these all-time highs getting retested across the board. Couple more about the BAM. You're asking about more about the BAM. I'm going to direct you to Harmonic Trading Volume 2. You can read all about the BAM theory, Bat Action Magnet Move, and that's available on the basic members. So go to harmonictrader.com and go to your basic members and click on Volume 2. A couple people asking about the BAM. Will I sell the software ownership after January? No. No more owner's licenses after December, after this month. Yeah, I got to do it that way, folks. So get with it now, and it's going to be by far your best opportunity. So for crude oil, again, we're still in a pause. You've had a heck of a year. It was, cranking to be one of the best years for crude oil. But again, like the markets and Bitcoin, we're still in consolidation. And this on the 4-hour, wanted to highlight this for the 22 chart. Okay, we got a lot of support down here at the 62 area. I think the continuous chart was 64, and we had talked about that. Well, type 1 reaction, and it's over. And we've come back down. We need to come back down probably again 62. Hop is at 58.77, so that possibility to do a full retest before we take off would be the ideal scenario. Also, the other thing, how do you know, folks? How do you know if this is going to type 2 or not? Well, I want to see where do we have an arrow? What's amplified doing? What are the indicators doing? Is there anything bullish here? Do you see any green lines down here? No. We have a red line, meaning this is getting close to retesting. On the top side, get overbought and then come back down again. Not to mention just downtrend. It's continuing lower highs, lower lows. Even though you're up now, you're just stair-stepping lower. Crude oil at the moment, crude oil is up 250 at 71.12 or 13 on the spot. Nasdaq's up 144, nice, at 15,820, now retesting that zone. Before I go back, I'll probably wrap up on Nasdaq in a minute, but let's look at gold. And a couple things about gold. Gold we know has the big support at 1720, and that's been the daily level, folks. Big bat retest, and I'm still liking gold. Okay, off of that support. But we had back in November, butterfly on the daily. This is continuous contract, and just gave us a reaction also. It's at target 1 off of that pattern. So that's our resistance for now. I really thought we'd get to as high as 1936. And that is, sorry, let's go back here. Gold is 1946 was that's target 2. We had the official retest, which is what we were looking for back in August. Came up, we nailed this, and I think I go to some of the sessions back in May that are online, because we talked about how this was just a reaction. Even go to June, and we were already anticipating this retest, and it happened real fast. Now we go sideways, grind higher, get a butterfly. Okay, type 1 reaction, that's over. And we're probably about to turn up again, get back up to the hop, maybe 18, maybe another 70, 80 higher in the next on a rebound recovery. The 127 around 1868. We could see a little pop, sizable pop there. But January, good historical month for gold. Actually, you're coming into a really good seasonal time for gold. And it is absolutely not a bad thing to be, anticipating that typical mid-late December to late January, early February gold move. Really common. We'll be looking at that a little bit more. Larger markets, the Dow now plus 525, 530. I did want to look at that briefly, get an update. And nowhere near the damage that you saw in Nasdaq. More sideways than anything of from really since September, and that should continue. We're not going to really get the fireworks yet that you'd want to see, and the big thing, I said this last week. Okay, when is this uptrend going to crack? Was it crack here, crack there? Was it going to crack there? That's not a bad point to be drawing the uptrend off the COVID low, with this being your general zone that has to be resolved. So for the Dow, again, this has been playing catch up. Nasdaq's really been the leader, but that's probably your high level consolidation zone. 35 on the top side, 33 on the downside. That's quite narrow. And you've been in that range since what? Since May, 6 months or more. Where do we go from here? There'll be plenty of time, because you do want to keep in mind the fact that under 34,000, this larger structure going sideways would really then cost you a lot more time. Go to the weekly on the Dow, and I do think the Dow could be playing a catch up here, where you rotate out of the tech into more consumer industrial names. But I'm watching this sideways action carefully. Obviously you want to break out, and you need to see if you're going to see this thing move, where we're just in this correction phase now and setting up. They'll dump it into the end of the year, or sell your losers, get rid of them, and then get ready for this thing to then continue. You would need to pop it, and pop it, convincingly. The other thing that I'm looking at on the Dow here on the weekly level, this is amplified RSI. We do have a simple divergence. Okay, there's RSI. Sorry, we do have an RSI BAM divergence, not simple divergence. RSI BAM divergence is you have an M formation up here on your initial level, your initial pivot point. So you make some kind of nominal high up here in this area. Then you come back down to the 50 level. Sorry. Come back to 50. This thing is getting sticky. So you come to the 50 level right there. That starts it. Now you want to go to have the full retest, which was what, 3 days ago? Sorry, not 3 days ago. Right there. 2 months ago. Basically same price where we are right now. This 50 level holds the key too. On amplified RSI, we do have the divergence that completed essentially that bar. We rolled over the next bar. So whatever, if this can't hold the 50 level and we start coming down into under the 50, looks like you want to then do the full retest, okay. You would have an opportunity, but it's at lower levels. This is why what we're hugging at the moment on amplified is so critical, and we have some things that preceded this that if you don't make progress out of this zone and you start to roll over like Nasdaq did, again, we're tightening up make or breaks for the whole thing. And you'll have plenty of time. You'll have plenty of time to react off of this stuff. What we'll see is the indicator trigger first, start to really roll over, and then it would be time. Something larger would have to take shape. Like you would need to see a larger pattern, indicator trigger, multiple indicator triggers before you would even think of another pivot point continuation. Monthly bat on gold. Yeah. Well, that's something I did talk about actually earlier this year. The monthly bat that you're referring to, you mean the bearish. You could draw that. Someone's saying, there's a quick comment, is this a bat pattern right here? Go off the prior high like that. From there to there. And then you come up to like an 886. Yes, that could happen. Again, I think it's you're fine. You're real strong at that at 1720, which is that's the daily bat, the type 2 bat. And that's in a better position, I think, than the markets. All right, because you're at the secondary test of the pattern down here. Don't like the fact that you have a bearish pattern there. That's not, when we see that back to back, usually what that means is going to be more time. But yeah, for gold and all the gold bugs who were going crazy back in 2019, 2020, this is the continuation opportunity. And we had a couple reactions, but now we have a full retest. So we'll see. Come January, you're gonna the beginning of the new year, the new time interval, the new month, all of that will have an enormous significance of what the long-term trend is going to tell you. If we're going to continue, it will have to happen in January, but it's not shaping up like that. That's why I'll be here all next week. I'll be here on Thursday, and we're going to be doing a lot more of this. Look at specific markets, specific opportunities, and let me show one or two individual companies that I posted yesterday that reflect what I'm talking about, where I want to see big patterns. Like if we're in a corrective phase or even a consolidation phase, show me the big patterns. Also, this thing is happening. So here's Peloton. Oh, that's on a 1 minute chart. It's a beautiful pattern though. That's not what I'm getting at. Peloton on the weekly, the all-time data. And I think this is good because it's like crypto and a lot of these other ones that have all-time data that are forming the patterns. There you go. Let's go Peloton. Go on the, come on back here. Here, let me show you. I had it here. Here's Peloton. All-time bat pattern. And this is one of several. There's actually, this is one I drew out. There's a bunch that are being automated. I thought this was great because it's such a story stock. I think that all of the hype that you saw in Peloton can be related to so many stories of crypto and other individual meme stocks that had the huge run, no continuation. You form your B point and you cannot continue and you roll over. You break the B, you drag it out in terms of time, and you come back for the full 886. So Peloton, all right, you're down there at the full 886 all time if you really thought this was a great company and you thought Peloton was the future. It's down here. It's at this price. And that's, I think, can be applied to so many of these concept stocks and other markets that people have been hyping. Is what's the price? And, like I said yesterday, Bitcoin, amazing. It's going to be around forever, but at what price? Here's one of the brokerages, Bybit. I'm seeing this in Mara and Riot Blockchain and all of them. Beautiful. Now that's automated. That's BTBT. Beautiful reaction, come back. Now we're at the type 2 reversal potential point. at the 886. So for everything that we do, that fits into the perfect framework. And there's a bunch of them that, individual stocks setting up, they're close. They're not quite there yet, but a lot of these are getting close. That Thursday, I will go through those because I think it makes a lot of sense. We're into the year end here. And so, these are getting thrown away. Maybe another day or two getting thrown away. So here's the deal in terms of the rest of the year. We have, 6, 7 more sessions, really full sessions. I will be back on the 23rd, Thursday, 11 a.m. And then next week we'll do Monday, Tuesday, Thursday again. Thursday I'll give away a bunch of books, but I want everyone to really be mindful of the fact that these are going to be low volume, intensive, volatile sessions. That over the next week or so, you'll have a lot of movement. I think you'll have unusual movement, especially in light of the fact of what has transpired in the last month and a lot of the uncertainty coming up, where this still needs to do a flush. In my opinion, something like Peloton and a lot of these others, they're into that final phase, but they have yet to hit terminal bar. I mean, Peloton's got to come in and still hit the numbers, but we're close to a lot of these. Here's one other one. This one just popped on my screen. Here's Rite Aid. Okay, Rite Aid is one that I featured a few months ago from a long-term perspective. Look at that, folks. Back-to-back patterns. This one's beauty because type 1 reaction got hit to target 1. And then we're coming back on the retest. We hit the XA level off of that deep crab. Type 2 is validated, and we do it with a Gartley. You can't get any nicer than that. There are many of these setups, so we're gonna save that for Thursday. I'll probably have a half dozen or more just like this. Andres, the lifetime for the upgrade, and everyone else. So it's really quick. So a couple people asking about, all right, so if you want to get the ownership package, folks, let me say this and wrap up. I'm going to make it really easy for everybody. So if you bought the TradingView program, use this code, use the 20% off code, and that's going to give you access. You'll be able to upgrade. Yeah, the full package. Basically, you get 3 software for $3K. All right. The pro versions have a lot more than TradingView, but TradingView is excellent too. And you can upgrade once you buy TradingView. Okay, you can upgrade. You have to do it by the end of the month, but use the code. And as I said earlier in the discussion, go with MetaTrader, try NinjaTrader. eSignal, in my opinion, is the best, but you have to pay for the data. And it's the best data. It's professional data feed because it's from Intercontinental Exchange. They own Interactive Data. Sierra Chart, super stable, great platform too. My suggestion to everyone is that you take advantage of the free trials to make sure you want to upgrade. Okay, and if you purchase the TradingView, again, as long as you purchase TradingView and you want to upgrade, don't worry about it. Just get the trial now. Beyond that, the details for the subscriptions and the packages for January 1 will come out next week. But take advantage of it now. If you have questions on Thursday, get back to me. I'm going to give away a 1-year subscription on Thursday's live stream, as well as a bunch of books. So you want to be here. So that's what I have for today. Again, thanks everybody. Appreciate hanging out. I had a couple of delays, but Thursday, 11 a.m. Be a lot of fun. So come on back. Otherwise, until then, as always, go get them, and we'll see you on Thursday.